What's up, traders? Welcome back to another video. So today I want to show you a setup that formed yesterday on Nasdaq. As you can see, this is the trade, and I want to show you, for those people who are struggling with entries, where to enter. As you can see, we will take a look at this trade and see how it evolved and how you know when to enter. Now this trade happened on London. I will also show you a trade on Nasdaq in the New York session. So let's jump into it. Now the first thing was we draw our initial balance. So 1 2 3 4, this is our initial balance. All right, now the market breaks down. These are the early hours of the market open of the day. The market breaks down. They break down. So in my mind, I know that this is a falling market. This is a bearish market. So I have my thesis in place, but as the day evolves, your thesis changes because the market is not static, it's moving. Now we come to our first hour. The first hour sets the high and the low of the session. All right, this is London on Nasdaq. So the first hour sets the high and the low of the session. Right? So our first hour, this is our high of the session. And keep in mind that our thesis is that we are falling. This is a falling market. And we have our reference point. This is our initial balance. What does the market do in the second hour? They go back and retest the initial balance. They fail to break above, but this is where the money is. They fail to break above. All right, another thing, this is a pump and dump setup. So this is a pump to the high. Now after the first hour has set the high and the low of the session, the second hour we are looking for it to break above or pin or whatever. Just we know that the money is above the high. Now the market in the first 30 minutes, they go up, test the initial balance, and then this is where they break structure on this candle. They break structure here. All right, at 332 they break structure. 333 they retest. 334 they give us the engulfment. We are here. All right, look at the way it has formed. This is they test the initial balance, they come, they break structure, they retest, give us the engulfment. Our entries on this engulfment. All right, this is the engulfment. Our entry is here. So lucky for me, the next candle went to retest around 50% of that engulfment. That was my entry for a 50 pip move. Now this is the entry at that engulfment. Right, now I was doing my math. That is a 60 pip stop loss for where the pump began. 200. Actually yesterday this was a 213 pip move. Yes, 213 there. Now when the volatility of the market is high, then that means the risk is higher, but the reward is also high. Now, let's talk about something new. Well, say we are talking about risk management. Yes. Say, for example, you trade one standard lot for every trade. Now, that means for every stop loss, that a maximum stop loss of 30 pips, that means you are risking $300 for, say, $500, $600. Now, when the spread or when the volatility of the market is high, you can still increase your stop loss, but you have now to reduce your lot size to match the risk. You will still risk $300, but the stop loss is bigger. That means you might use a 0.7, 0.6 lot size, but the risk is still the same. That is what you must understand. And yeah, so for instance, if this market, because you see this is a 65 pip stop loss, and for a risk reward ratio of 200 pips, it's still a good trade. All right, now let's go to the New York session. Now, remember our thesis is that this is a falling market. Now, we have this, the first hour sets the high and the low of the session, but they break, and then you must understand the market moves in 3 pushes. Now, from the low, we have 1 push, 2 push, 3 push to the high for the continuation down. So still the first hour sets the high and the low of the session. Now, in my mind, when I come in the first hour, and this is what I see, I know this is the 1 move, 2 push, and then in my mind I'm like, we have to go another push. I don't care whether it will go in 3 candles or 1 candle. I don't care. I know that we are going higher and then we will fall, because we want to align ourselves with the general trend, the general bias of the day. All right, so the first hour sets the high and the low of the session. The second hour, what does it do? This is our high of the session. The second hour. Now, when you see the market in the first few minutes of the second hour give you a trade setup, that is most likely a false setup, because at 9:30, what I've come to learn is that near 9:30, so at around 9:20 to 9:40, there is always, well, there is a very high probability that they will stop hunt the high again. So if you got in early, you'll find yourself being stopped out, and that occurs mainly on Nasdaq and gold. All right, I don't really understand what happens in the other pairs because I don't really trade them. Now, the market comes higher, gives us an M pattern and a break of structure. All right, they break structure here. So we have this M pattern. All right, as you can see, the market breaks down, then comes in 1 push, 2 push, then a 1, 2, 3 to the high, and gives us the engulfment. This is our entry. Now, our entry, our stop loss above, and our 50 pip target. Guys, do you see when you understand how the market works? Well, for me, if you are really starting out, you will have a clogged judgment, but the more you're in the market, the more you are consistently trading according to your plan, the more you see these things. And guys, when you have a losing trade, that does not mean you are a failure. You have just learned one new way of not trading that way. Because a mistake is repeating a mistake. The first time you do a mistake, that is just learning. The next time you do that mistake, now you are just foolish. Anyway, guys, so yesterday those were the best the highest probability setups. Although gold gave us a very good setup during the London session, the New York session, it was just a continuation, but I was not keen on looking at gold during the New York session. I knew we were going higher, but I like falling markets. Just like Stacy Buck says, falling markets, they fall fast. So the first hour sets the high and the low of the session, and the process is still the same when you look at the initial balance. Now with gold yesterday, the initial balance, this was our initial balance. They came higher, then came down, and then they broke out. Now this is a breakout. Remember, this is a breakout because they have already broken above the initial balance. So they broke out. Now I knew they've already broken out. We must come to retest this. It's called the initial balance. We must come to retest the initial balance for it to continue higher. So in my mind, I knew if we don't continue higher, then we should continue lower. Now, as usual, the first hour sets the high and the low of the session. So when you have your buyers, all you are doing is just checking if the market is doing a good job of delivering your buyers, or, you know, the first hour sets the high and the low of the session. The second hour continues higher, and then we have our break of structure. Well, it happened up here. That is our break. That is where our break of structure is. They come down and then give us the engulfment. Anyway, I found the market had gone a little lower, but still the entry was still valid for a 24 pip stop loss for a 50 pip target. Look at the way these things work. Pump, 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 pump to the high. Then they drop. The stairs, escalator. Stairs, escalator. Now, with Stacy Buck's videos, Stacy Bucks breaks down every setup, but in your mind, know that everything is connected. Once you are able to connect the dots, then you'll be able to see the bigger picture of the market. You'll see it evolving, and you will know this is a stop hunt, this is a continuation, this is a pump and dump. Anyway, it all comes to you. How bad do you want to succeed in trading? So, if you sit down and complain you're not making any money, you will not make any money. If you sit down and understand the reason why you're not making money, then you will have more experience, you'll have more information. And trading is all about information, how you connect the dots. And even for me, I still learn something new every single day I'm in the market. Anyway, hopefully you got value from today's video. I hope I've opened the eyes of some people. Yeah, it is only when you trade live, even if it's a demo account, even if whatever, as long as it's live. You are not doing it